Give us your view as to whether or not some of these deals at least imply there's someone seeing value in some things.
Well, first of all, someone is seeing value, especially if you look at where the share price was in your previous discussion and where they're being taken out now. I found it really interesting that the conversation that the CEO said they took every bit of dollars off the table. It just makes me wonder a little bit when it was twice the price that it currently was taken out. So I think that perhaps that shows that tech CEOs are getting more realistic as well.
Right. We mentioned in the intro here your view that there's going to be some squeeze, especially as people try to finance future operations. How's that going to play out? Who do you think is the most vulnerable?
Well, first of all, what's playing out is a lot of these companies were driven essentially by super cheap money. I mean, if you go out and get fixed income rates at 2%, that gives you a tremendous amount of money to finance. From a general standpoint on the tech business, if a company does not have earnings, if a company does not have strong cash flow, and there is uncertainty about this company, I just think they're going to get punished by investors. If you look at even the companies that have tremendous earnings and tremendous cash flow, they're getting punished by investors. So I just think it's time to be very cautious on more what I call speculative tech.
Yeah, but Michael, thread the needle for me on cautious here, because on the one hand, we've got investors who 2 years ago were just throwing caution to the wind, buying things at all kinds of prices. You don't have to go back 2 years, you can just go back 12 months. But then on the other, you've got private equity that's seeing value in some of these, and their game plan is to, hold tight for a couple of years and bring these things public again. So to what extent can the retail investor think like a private equity investor if the time horizon is more than 3 to 6 months? And how should the retail investor go about that?
Well, I think it's a really good question. I think what's really important here is to understand that private equity and venture capital expects to fail 80% of the time. They're really going to make their money on their home runs. So what I'm suggesting is if you're an investor, if you have $100 and you put $100 into 5 different companies and 4 fail and 1 is spectacular, can you live with that? And hopefully you pick one of the companies that's going to make up for the other losses. So I think what's key here is certainty or predictability. And you could certainly be like the private equity VC, but I don't know how many viewers out there are going to buy 5 stocks, have 4 of them blow up and be 1 great and still be happy. Maybe not everybody.
Right, that's a more difficult
like
proposition.
VC than private equity. Yeah, okay.
Well, then if you look at the private equity space, maybe is there a trade here for the retail investor, the average investor, for arbitrage? I mean, if Morgan Stanley puts out this screener of what to look for, they give you names. Could you look for some of these, between $1-10 billion software companies that could be targets if you see how active Thoma Bravo and others have been in the space this year?
Yeah, you can do that. But of course, what you're really asking me is what company is going to be taken out next. And nobody knows that. And so I think it's helpful to watch where the institutional investors are putting money, particularly if they're buying at a 50% in reduction in price than they had, 12 months ago. So I think that certainly is telling. In terms of specific trades, it's just hard to say. I think it doesn't really follow how we invest money, which is we can't take the pain of 4 blow-ups and 1 success. Most of the people we work with as a private wealth manager can't take that kind of pain. They want more certainty. And there's plenty of tech names right now that are trading at a pretty good discount from where they were, that I don't think you need to go out on the edge unless you're a private equity type of investor.
Yeah, we'll be talking about that, where software fits in the appetite for risk in technology in the months ahead. Michael, appreciate it very much. We'll talk again soon.
Hey, thanks, Carl.